What's up everybody, YTG here. I'm back with a new lecture, and today's lecture is about turtle soup. So most of the concepts I will be repeating again. If you have watched my old videos and you think you have mastered that, you don't need to watch it. But if you are still struggling with your trades, then you definitely have to watch this because there is a lot of misunderstanding about the turtle soup. I have heard most of the people who say it's just a stop loss hunt. Yes, it's a stop loss hunt, but how can you trade using this turtle soup? There are certain rules by which you can trade this turtle soup. And hear me on this. If you master turtle soup, you don't need any other strategy, okay? Because it's a combination of different concepts. It's not just a stop hunt. If you master it, you don't need any other strategy. And to master it, all you need is this lecture, okay? I bet you if you watch the whole video and you'll pick the whole concept, you won't need any other video or lecture or any other strategy. This lecture or this strategy is enough for you to be a profitable trader. So let's start this lecture. And before starting the main concept, I will explain these terms, okay? Because we will be using these terms in our lecture. So the first one is order block. What is order block? So we have two types of order blocks, bearish order block or bullish order block. This one is a bullish order block and this one is a bearish order block. You see this black line? This is the support line, okay? You can see the price is trading here and makes this support. So this black line is the support line. And then all of a sudden, you see a candle closed below this support line, okay? The price was trading above the support line and then a candle closed below it. So what you normally do is you say the support is broken and you get out of your position and you start shorting it. But you see here the next candle closed above it, okay? The next candle closed above this down closing candle. So an order block forms here. What is order block? If you get a close below the support line, okay, a down closing candle, and then a next candle closes above it, then this is a bullish order block. So in this case, what you do is you wait for this gap to fill. And so I will explain it here. This gap is called fair value gap. The gap between this candle and this candle, okay? You can see this gap. This is called the fair value gap. So once this gap gets filled, a candle comes down. This is where you have to long and your stop loss will be below here, okay? This is called bullish order block. And here you can see a bearish order block, okay? This line is your resistance line, okay? The price was trading here and suddenly a candle closed above it. And then the next candle closed below this up closing candle. So this is your bearish order block. And once the price trades back into this fair value gap, this is where you have to short and the price will go down, okay? This is your fair value gap, the gap between this candle and this candle. This is the fair value gap. So this was the first two terminologies, the order block and fair value gap. I hope it's clear. If it's not, you can ask me in the comments. Okay, so now we will come back to our next terminology, which is SMT, divergence and liquidity. Okay, so first I will explain liquidity and then I will go towards SMT divergence because we will use order block, fair value gap, liquidity, okay, to use the SMT divergence, to trade SMT divergence, okay? We will use order block, fair value gap and liquidity to trade SMT divergences. So what is liquidity? So you can see this was the support, okay? Price was trading up and down, okay? So you will see most of the new traders will start longing here and they will have the stop loss below this, okay? So this is your liquidity point where there are many stop losses, okay? Many noob traders have put their stop losses, the retail traders. So this is your liquidity level, and once this liquidity is taken, okay, the stop losses are hunt, the stop losses are hit, and then the price suddenly goes up. So this is your liquidity level. Similarly, this is also the liquidity level as this is the resistance. So most of the noob traders short at this point and put their stop losses above this resistance line. So this becomes a liquidity level. And once the stop losses are taken, the price trades down, okay? So this is your liquidity. Now I will explain SMT divergence and I will explain what the turtle soup really is, okay? It's actually divergences. but not every divergence is a turtle soup. Okay, I will explain which of the divergence is a turtle soup and which one isn't. Okay, so before explaining SMT divergences, I will show you the importance of SMT divergences in turtle soup. You can see here, this was the support, the price was trading above it, okay, and then the price came down, okay, the stop loss was hunt, and suddenly it went up. So this is a perfect example of turtle soup. But you can see here, this was the support, okay, the stop loss was hunt. Now you will expect a turtle soup to go up, but it went down. So to predict this, if it will go up or if it is going down, you need SMT divergence, okay? To predict if it's a turtle soup or if it's not, you need SMT divergence. So what is SMT divergence? So in trading, you have pairs which are correlated, which are either directly related or inversely related. For example, you have Bitcoin and Ethereum, which are directly related, okay? Then you have Bitcoin and gold, which are inversely related. In Forex or indices, you have Euro and GBP, which are directly related. So these are SMT pairs. So to find SMT divergence, you need SMT pairs, okay? Like here you can see, this is the Bitcoin chart. So the pair is Ethereum, okay? Here, this is the Ethereum. So this is Bitcoin chart and this one is Ethereum chart, okay? You can use SMT divergence and turtle soup on Forex and indices. You can use it for gold. You can use it for Euro and GBP, anything, okay? So here I will give you the examples of Bitcoin and Ethereum, and you can apply this strategy on anything you want, okay? So here you can see the support was broken by Bitcoin here, okay? And it came down. And you can see the support was also broken by Ethereum here and it went down. But you can see this was a support of Bitcoin here. And if you compare Ethereum with Bitcoin, this bottom was swept by Ethereum. And you can see this bottom isn't swept, okay? So what you get is you get a divergence like this, okay? This low isn't swept and this low is swept. So this is called SMT divergence. To confirm if it's a turtle soup or if it's not, you need to see SMT divergences. So you can see here there is a perfect divergence. Let me remove this. Okay, in Bitcoin the low wasn't swept, and in Ethereum the low was swept. Okay, so you got an SMT divergence. Now it's time to apply for other terminologies like order block and fair value gap. So we will use these two terminologies now. We will shift to lower time frames to look for an order block in this area. Okay, now we got SMT divergence and our turtle soup is confirmed. So now we need order block and fair value gap to get into our trades. So we will look for any order block or fair value gap in this area. So I will shift to smaller time frames. Okay, so I have shifted to 2-hour time frame. Okay, our turtle soup is confirmed, our SMT divergence is confirmed. All we need is an order block. So in Ethereum, you can see here the support was broken and this was the down closing candle, and then the green candle closed above this down closing candle. You can see this was the down closing candle and the next candle closed above it, and this was the fair value gap. So the price went up and came down through the fair value gap, and this was your area to long. As I said before, your stop loss will be below this swing low, and you can see how quickly it went up. So this is how you use this strategy. Okay, first you look for an SMT divergence. Okay, then your total soup is confirmed. Then you look for order block and fair value gap to enter into your trade, and you put your stop loss below this swing low. So this is how it works. Okay, you need 4 things. Okay, you need turtle soup, you need SMT divergence, order block, and fair value gap. So you will see many examples like this on smaller time frames and on higher time frames. Okay, and if you have any question, you can ask me. Let me give you one more example. You can see here, this is the divergence of Bitcoin and Ethereum. Okay, so what you have to do is you have to look for an order block and fair value gap in this area. Let me show you. This was the support line, okay? The support line is broken. Now you have to look for an order block. This is your order block, okay? The down closing candle, and then the next candle closed above it, came down, and it went straight up, okay? So this is how it works. This is another example of Bitcoin and Ethereum. You can backtest this strategy, and if you have any questions, you can ask me. Thank you.